Risk. This is a word that has been tied to crypto for so long, probably ever since it was established. Investors are informed of the risk that come with the investment that they make, and it takes a lot of guts to stay and hold on to your assets in this market because of the inconsistencies and crashes that are happening. Currently, the whole of crypto seems to be not doing so well, and these risks are being emphasized now more than ever in the recent years. Factors inherent to the industry and outside of it contribute to the pains we see in the valuation of the assets, and while it does seem like we are experiencing the worst, it might not be the case. Thank you for watching Diversified Streams, your go-to YouTube channel for all things crypto and finance. Be sure to check out our community post about these subjects. We are curious to know your opinions on these matters. Also, if you haven't subscribed yet, click the subscribe button so you don't miss out on the latest news and tips related to crypto. And make sure to keep your notifications on so you'll be updated with our latest videos. We frequently post so you wouldn't want to miss them. In today's video, we will be talking about the possibility of seeing an even worse situation than we are now in Bitcoin, how it would happen, and why it is going to be like that. We have some amazing input from Willy Woo to help us understand this idea. Without further ado, let's get started. There's a lot of ruckus happening in the market of crypto today, and it is all tied to the crashes that we are seeing in Bitcoin. Willy Woo, a famous on-chain analyst, has a reason to believe that this is not the worst we are already experiencing. As an analyst, of course, Willy Woo did not come to this assumption without any assessment of the conditions, and he actually based it on 3 metrics before saying that we have yet to bottom for real. Compared to the lows that we have seen in June the last time, Willy thinks that the true bottom is only on its way, especially when you put this behavior side to side with the other bear markets. In one of his tweets, the on-chain analyst stressed that in terms of max pain, the market has never been in the same low as it did in the past bottoms. Based on recent charts, we have only ever seen 52% of the coins on the low. When you look at the trend, we've had lower lows that showed 61%, 64%, and 57% of the coins suffering. One of the 3 metrics he used to create this assumption included the use of a chart from Glassnode that depicted the amount of supply and profit in Bitcoin. If you look at this chart, you would notice that we are indeed close to seeing the bottom, but we just are not there yet. That's a fine line that's important to genuinely see where we're headed with all the dumps we're experiencing. In a follow-up tweet, he said that history needs no repeating, especially when the modern era has followed a future hedging that is not picked up on-chain. However, in the event that it does repeat, it would most likely set the price at $9,100 before starting to skyrocket. Following his tweet series, Willy Woo also said that he is not particularly positive about investing in any flagship crypto asset at the moment. His tweet reads, "Supply and profit trendline break. It broke cleanly in all of the prior bear market bottoms. This is the reason why Woo thinks it would take Bitcoin to go down to $9,100 before the bear market ends and it starts to thrive again." Following this, Woo's assessment of the situation brings him to another assumption that the basis of cost for short-term holders will most likely be stooping lower as it did in the recent bottoms we've seen in the bear market. Again, he expresses in a tweet that we are so close from seeing this, but we just are not there yet. There was a significant low that happened in 2015, but it was not actually the absolute bottom. It was during 2019. We are seeing the same thing unfold this year, 2022, where people are somehow almost convinced that we are seeing the absolute bottom, even though Willy Woo has reason to believe we are not there yet. Do you also believe that we are in for some lower lows as this year continues? We are only a few months away from 2023. But things tend to change pretty quickly in crypto. Are you positive about this? Or do you think we've actually been experiencing the genuine bottom? Let us know your thoughts by leaving a comment down below. Let us start a conversation about this. While you're at it, if you have not yet given this video a like and subscribed to our channel, make sure that you do it now so we can have you on board in our community. 2 metrics have been discussed. Let's move on to the third. The last metric, Willy made use of the rate of accumulation. And in his tweet, he says, "Have we bottomed? I like to quantify accumulation as coins moving away from sellers to urgent buyers. Red line track this. Black arrows are all the same height. So far, we hadn't have the levels of accumulation synonymous with the prior bottoms." He again supports the metric with a chart that depicts the bear market accumulation levels based on the last bear markets we have experienced. If you look at it, the behavior of the bear markets that have passed all look the same except for the one we are presently in. Still, it is important to look at this difference because clearly, the environment in which these past bear markets have taken place are different from the one we are in. We are experiencing harsh inflation and an unofficial economic recession in today's world, which was not present in the past bear markets. Additionally, the Federal Reserve was able to give investors some type of protection or support during these bear markets, whereas now, they are having the same struggle of stabilizing the economy. In our recent video, which you may watch if you haven't yet, the Feds have made a decision to increase the interest rates by 75 basis points as a way to numb the harsh implication of the economic recession. Clearly, the world is suffering way more than it should, and prices of assets and goods in general are not in a good state. In other news, the merge has finally taken off last September 15, and people could not be any more excited about it. Vitalik Buterin, the co-founder of Ethereum, expressed via Twitter his happiness towards the success of the merge, deeming it a quote-unquote a big moment for the Ether ecosystem. Of course, he did not fail to acknowledge the effort of the people who worked together to make this possible. Vitalik was also positive that the merge will be reducing the consumption of electricity worldwide by 0.2%. Which may look small, but actually has great effects in the bigger picture. Several notable personalities also expressed their support of the merge, including Charles Hoskinson, the creator of Cardano, and Martin Kopelman, the CEO of Gnosis Limited. They both think that the merge is a product of the scientific advancements in the industry, and they can't wait to see what this new era of trading cryptocurrencies will bring to the table. Speaking of Cardano, if you are a supporter of the network, you have all the reasons to be giddy about it, because Cardano's Vassal upgrade is set to take place. Actually, it may have already taken place by the time you watch this video. This Vassal upgrade is intended to augment the capacity of the network to facilitate smart contracts, all by increasing their throughput and cutting down on costs. The Vassal update will introduce Plutus version 2.0, and if you're not familiar with it, Plutus is actually a foundational layer of Cardano that is designated for the smart contracts. While the upgrade happened last September 22, it won't be until the 27th before the Vassal update will be available for the users to try. And that is it for today's video. I hope you found this video informative and helpful. As always, if you did, please show us some love and support by giving this video a big thumbs up and subscribing to our channel. And make sure to keep your notifications on so you will be updated whenever we post new videos on all things related to crypto. This has been Diversified Streams. Thank you so much for tuning in, and see you in our next video.